Hi friends, in today's video we are going to do the share analysis of Exide Industries. If you look at the business model, you can see the business model is manufacturing of storage batteries and allied products. Allied products means it can be inverters, it can be solar panels, something like that. Now this company has a very good growth potential considering the upcoming electric vehicle and solar markets. Batteries are an essential component of both solar and electric vehicles, so batteries has a good demand, right? The market cap is 15,470, which shows the company is in a mid-cap sector, which means company is established, but not firmly, but established. At the moment, Exide is the largest battery manufacturer in India. The current market price is 181 rupees, which is at 40% discounted price from its all-time high of 305, which happened in 2018. Now the book value is 85.6, which is 40% of the share price. The face value is only 1 rupees, which means stock split not possible. The dividend yield is 1.10%. That is, you will get 110 rupees returns per year for every 10,000 rupees invested. So if you look at the bonus history, you can see the company has issued bonus 3 times. But the last issue came in 2003 at the ratio of 1:1. That means the probability for getting a bonus is very rare. If you look at 12-month returns, it is 13%. 5-year returns at -6. So both these figures looks bad, right? If you look at the maximum returns, you can see in 22 years the company has registered a growth of 2,536%, 2536%. That is really good, right? But if you look at the inventory turnover, you will be disappointed because inventory is only 2.76, which is very low. If you look at the earnings per share, it is 10.05, which is moderate. That is 5% of the stock price. So I can't say that it is low, but it is not very high as well. So it is moderate. ROE is 11.8%, ROC is 17%, and ROA return on assets is 3.0. This is also in the moderate category. I cannot say that it is very high. Also, this is not bad. This is okay. So I would say it is moderate. Now debt to equity is only 0.07, which is very good. Debt to profit is only 0.63, which is fair, I think. Promoter holding is 45.99%, which is very good, right? Which means promoter has good confidence in this company. If you look at DII and FII, they are holding 23.31% and 11.82% respectively, which means they have decent amount, means the company is still attractive for investors. If you look at the stock PE, it is only 18.1, which means the company is undervalued. And if you look at the industry average is 21.5. So the valuation is even below the industry average, which means the company is undervalued. The company has consistent and stable profit in last 11 years, but the sad fact is the profit is not growing. It is flat. If you look at the reserves is 7,187 crores, which has increased from 6,382 crores in the previous year. So that shows that company has solid reserves to manage any financial crisis. You can see that the cash flow is positive, but the debt is growing. Again, you can see that the CEO and managing director of this company is Mr. Subir Chakrabarti, who is aged above 60. I couldn't find the exact age, but it is above 60. And he got a bachelor degree from IIT Madras, and he got a PG diploma, that is postgraduate diploma in management, got from IIM Calcutta. He has 30-year plus experience and 20-year experience with Exide. Now the chairman is Mr. Bharat Dheerajlal Shah, who is age 74, and his qualification is bachelor degree from Mumbai University. So you can see that the managing director and CEO, Mr. Subir Chakrabarti, is well educated and well qualified person with sufficient experience. Also the chairman of the company, he is also an independent director of this company, Mr. Bharat Dheerajlal Shah, has also got some education. So the company is managed by qualified and experienced personnel. Then another thing is Exide is a foreign company, and the largest holding is by a Singapore company who holds 45.99% stake. So this company is not an Indian company, it's a foreign company, right? Even though it is established in India, but it's owned by a foreign entity. You can see the Exide application and network in annual report, page 4. Here you can see that there is automotive, there is submarine, there is power, there is telecom, there is infrastructure, there is UPS, material handling, renewable, railways, mining. So there are so many, right? And if you go further, you can see that If you go further, you can see that the company is headquartered in Kolkata, West Bengal, and you can see its manufacturing plants. There are some of plants in West Bengal, then some in Uttarakhand, then Haryana, then Gujarat, then Maharashtra, and one in Tamil Nadu. This is how the network spreads. Now you will be able to see the global presence in annual report page 5. You can see here that Exide is also in Bangladesh, Sri Lanka, Cambodia, Malaysia, Mauritius, Singapore, Vietnam. Also you can see many subsidiaries of Exide, and they are also located in ASEAN, Southeast Asian countries, right? And some are there in Africa, and a very few are there in Europe and North America. So it's a global company, right? It's an international company. So the subsidiary information is available in annual report PDF page 50. An organization is headquartered in Kolkata. Already spoke about that, right? Here in the subsidiary section, you can see there are 8 subsidiaries, right? But the first subsidiary, Exide Life Insurance, is recently the company has ceased its operations, and this company is sold to HDFC Life. So the first subsidiary which is shown in the report doesn't exist right now. So right now they have only 7 subsidiaries. Again, you can see that the remuneration paid to the directors, which is 4-member panel, they are taking 15 crores as salaries. Now you can see that only 1.8% of profit is taken as director's salary. The information is available in PDF page 59, and here you can see that below 8% is okay. So this is fine. This is perfectly fine. Here you can see the amount paid to 4 directors of the company in PDF page 59. The company is founded in the year 1947, which means they have completed 70 years, almost the same year of independence, right? And recently 2021 Q1 financial results has been announced last month, and if you look at the Q1 2021 net profit, which is 137 crores, which is increased more than 191% compared to the previous year same quarter, that is compared to Q1 2020, which is 47 crores, there is an increase in this quarter. Now if you compare the Q1 2021 to the next quarter, that is the last quarter of 2020, you can see there is a fall. 137 this quarter, but previous quarter it was 241, right? So there is a fall. Now this result is a moderate result, right? There is some hope, but there is some concerns. Now this year you can see first dividend of 2 rupees is issued on 4th February 2021. Normally company issues 2 dividends per year in recent times, so one more dividend issue this year is possible. So let's check both these things in the screen. Here you can see that the unaudited standalone financial results for the quarter ended 30 June 2021, and here you can see that this quarter it is 137 crores, previous quarter 241, and the last year same quarter it is 47 crores. So if you look at the dividend issue, you can see that there is a dividend of 2 rupees has been issued on 4th February. However, if you look at the previous years 2019, 18, 17, you can see multiple issues, at least 2 issues, right? And most likely the amount stayed within 2 rupees. Now the last year they issued 2.5 rupees. However, there is still hope that we may having one more issue this year. So let's have a look at the technical part of this aspect. So you can see that the 200 exponential moving average is clearly above the price line, and this is where the current price is standing right now 182 rupees, and the 200 EMA is above it, which means the chart showing bearish. So price is expected to go slightly more downwards up to 175 levels possibly. Again you can see that this 48 exponential moving average and 13 exponential moving average, it is showing a bearish trend. It is not showing a clear trend but somewhat bearish, right? Now if you look at MACD is positive and it is showing bullish. MACD says that the price will go up. Now the stochastics shows that the price is going for a short term dip. So it's not showing a clear direction, but it is showing a short term corrections. Now RSI says is neutral. So overall what I understand from this is price is expected to go down somewhat more to 170 levels, maybe 175, and after that it is expected to move up firmly. That's what I understand from the chart. Again the same thing is mentioned here. 200 EMA is bearish, 13 and 48 EMA is looking bearish. Current price is somewhat okay for purchase, but considering the flat profit every year and failure in quick adoption of lithium battery, long term buy is not recommended. Now we know that the profit is coming flat every year, so that's not a good sign. Again the lithium battery manufacturing has not started yet. Still there is a delay, so this is not good, right? Hence, a long-term buy is not recommended. Again, you can see that considering the flat profit every year and failure in quick adoption of lithium batteries shows that company has sufficient weakness within it. So, a long-term buy is not recommended. MACD is positive and clearly bullish, best indicator for horizontally traded stocks. So, this shows that price can go up. Again, expecting minor downside correction in short term before the upward movement. Stochastics is slightly bearish and near the overbought zone. RSI index is near the overbought zone. Again, still it is neutral, right? The price is expected to go up sharply after small consolidation. That's what my prediction is. The price is expected to go up sharply after small consolidation. Up to 14 days consolidation is expected, but by end of this month or maybe before that, the price can go up sharply. In my opinion, you should follow buy on dip strategy, and support can be found at 179, 175, 165. At some point of these levels, you have to pick the share. Any price around or below 180 will be fair entry. Opportunities only for short and medium term. So this share is only good for short and medium term opportunities. And any long term investment plan looks risky because this company is not doing very good. Between 160 and 180 will be much better entry. Minimum and maximum long term portfolio allocation is 1% and 2% respectively. So you should buy 5 to 10 quantity for portfolio size of 1 lakh. Immediate target will be 200, medium term target is 240. Long term target is not applicable. If you like our video, please subscribe and like our channel. Thank you for watching.